All right, everyone. Good morning and happy Monday. It is the 24th of Feb. Do a quick sound check here and we'll get jumping on in. All right. Good morning, Lorna. Good morning, Mirza. Good morning, Eric. Good morning, Greg. Good morning to all. All right, guys. Before we jump in and talk about the current market, one chart I think will be really important to keep in the back of your mind is going to be the monthly chart here on the S&Ps. And if you look back from, we'll call it March of 2022 up until December of 2023, monthly chart on the S&Ps is very choppy, very range bound, but they do give you that giant monthly squeeze. You all know I'm a believer in big moves come from squeezes, usually none bigger than a big monthly squeeze. Pretty good example here being right, back and forth, build up all the energy. When they finally fire that monthly squeeze, that gives you 1, 2, 3, 4, 5, 10, 12 months of pretty steady upside. In other words, does pretty much exactly what a good squeeze should do. Build up all the energy near that 21, fire the squeeze, take price towards that 3 ATR target. And once your squeeze takes you towards that target, the major thing to understand, you've already seen the easy part of that move. Does not mean we have to pull back, doesn't mean we can't keep on going higher, but from a squeeze perspective, and more importantly, a probabilities perspective, the easier, more explosive part of that move will be that move from your 21 EMA towards that 3 ATR target. Beautiful move, but again, from that point of view, we're closer towards the end of it than the very beginning, which just means eventually down the road, could be a couple of weeks, could be a couple of months down the road, eventually price here on the monthly chart does have to meet back up with that 21 EMA. In the short term, that pullback would feel pretty bearish. From your monthly charts perspective, could be the first really good buying opportunity, since that breakout, since that squeeze fired. But I show you that as a little context, just in case things do get a little bit weaker here in the next couple of weeks. Bigger picture, I don't think a flush down to 5325, 5300 would necessarily kill the bull market. Granted, your hourly and 30-minute time frames, they're going to get a bit ugly. But yeah, if anything, keep that in mind. A lot of that clear direction, a lot of that momentum back in 24, I do think came from that monthly squeeze. Up here at the extension, could be a point in time or bigger picture, market's getting a little bit tired. What can quickly reset that is a good flush to your 21 EMA. So I'm not saying we're pulling back into 53, but if we do, just keep that bigger picture chart in mind. Alrighty, but jumping into the week ahead, guys, and had a pretty good flush there on Friday. So if we look at all the pretty colors here on the spreadsheet, and keep in mind, this is our scoring system. So we're taking the weekly chart, 3-day time frame, 2-day time frame, all the way down to the 30-minute. The strongest possible score for one given time frame would be a positive 15. So if the weekly chart down to the 30-minute had a positive 15, your total score would be 120. All right, so strongest total score is positive 120. The weakest total score is negative 120. And we get working through a few of them here. QQQ drops from, I think they had it up to a 90, back down to a 36 out of 120. All right, now 36 out of 120, not really bearish. If I want to wake up and get short today, I think I can do better than a 36 out of 120. But if I want to wake up and get heavily long today, well, I also think I could do better than just a 36. S&P is a 19, Dow Jones a negative 11, small caps a negative 64. Take all those total scores. Right now, the indexes are at negative 2% of their max strength. So strongest possible would be QQQ, 120 out of 120. S&P is 120 points, RSP, Dow, all the above. Combine them for today, and we got a negative 2. Right, very neutral. Not great for bulls, not great for bears. You look down here at the Big Ten names, right? Really, really mixed. And kind of tough to think the QQQ can break out and rally into new all-time highs. when the Big Ten is so mixed. Microsoft a negative 60, Tesla negative 37, Google negative 35, TSM negative 32. The only real standout right now, maybe two, Apple and your Netflix. Drop it down here to the sectors. Big Ten. Big Ten is at a mind-boggling 1% of max strength. I can't heavily short that. I can't heavily get long that. My best bet is do nothing with that and wait for a bit more clarity. And then looking down here at the sectors, also a little bit mixed. Gold looking pretty good. Utilities, XLP, silver, healthcare, biotech, communications. And then the bad boys would be materials, industrials, XLY, Big Ten, and Bitcoin. Your sectors have a combined 24% of max strength. So take your sectors, take the Big Ten names, take the indexes. Combination is a market at 14% of max strength. I can't buy it. I can't short it. I can't do too much with it. Very, very neutral. And we want to apply a little bit of context to neutral. Is it neutral that is leaning a little bit bullish? Is it neutral where things are leaning a bit more bearish? Do we have problems on our bigger time frames? Do we have problems on our lower time frames? We get walking through the charts here one by one. We're not at a point yet where bigger problems have occurred on bigger time frames. Meaning the monthly chart for the S&Ps gets a buy signal and a score of 15. But with room eventually for a pullback to that 21. Right now, the weekly chart has a squeeze above the 21 EMA and 13 points at a 15. That could all change very quickly this week, but into the open, it's not a bearish weekly chart. Maybe not fully locked and loaded, poised for the immediate breakout, but not bearish. Your 3-day squeeze for the S&Ps. 11 points and a 15 above that 21. Not perfect, not 15 points, no white arrow, but I can't short that just yet. A good short would be, hey, here's a 3-day squeeze, and we're below that 21, and we have a negative 11. 2-day squeeze S&Ps. You're at your 21 EMA, and you're getting 9 points out of 15. Not the perfect long, but very far from the perfect short. And then your daily chart S&Ps is also in a squeeze with a 6 out of 15. Now, granted, go back a couple of sessions ago, it's a much better looking daily squeeze in the short term. You're above your 50, you're above the 21, you've got the buy signal, you got the perfect score. The bulls have had the ammunition for a bigger breakout. Daily squeeze, A+ signals, then the news comes out Friday, a little flusher, but we're not bearish. Gap it down, dump it, pull back more this week, it could become bearish, but not quite yet. From the S&Ps, we move over to the QQQ. Your QQQ monthly chart. While you didn't have a monthly squeeze, you push off that 21, triggers a really good year of upside. They take it towards the 30 ATR target. Could be a conversation we're having months down the road, but eventually price will come back to that monthly 21 EMA. Your weekly chart QQQ. Squeeze 13 points and a 15 above that 21. To me, bearish would be we're closing back below the weekly 50. All right, then you maybe got a big flush coming. 3-day squeeze QQQ, 11 points and a 15 above the 21. Can't be short in that yet. But it doesn't mean at the open today I'm going to jump in and buy it. Good looking 2-day squeeze and your daily QQQ. My thought would be get a couple closes back above the daily 21. And I think the bulls have shaken it off and could be in a good spot for another pop here. $1 million question will continue to be, whether it takes a week, whether it takes 10 weeks, when they eventually fire, which way will these bigger squeezes fire? When they fire, they will kick off really good swing trading. You've got the Big Ten basket with a weekly, 3-day, 2-day daily squeeze. QQQ's got a weekly, 3-day, a 2-day. S&Ps have a weekly, 3-day, 2-day daily squeeze. Google's got a few. Nvidia's got a few. Big moves come from squeezes when they fire. Choppy markets come from squeezing. And then I think, put it in a nutshell, without getting caught up too much in bullish, bearish, breaking out, breaking down, next big move, just plain and simple, we're kind of caught in that moment in time. You got the weekly chart on the index is printing a squeeze, 3-day time frame, 2-day time frame. Reality is, guys, till they fire, it's a lot of glorified back and forth chop. Till that QQQ 3-day squeeze fires, which can take you down to 480, or it can take you up into 560. Until it fires, they're going to flush it down to -1. They'll pop it back towards +1, back down to the 21 EMA, back up to +1, 21, +1. I don't think anybody really enjoys that. Everybody enjoys breakout squeeze fires, and for a good handful of candles, you're getting really good, clear direction. We'll be at that point eventually, but knowing exactly when is the tricky part for now. But all right, all that being said, I got a couple things to work through here. I'll give you a couple of decent over/under levels for the week. On both the QQQ and the S&Ps, I'd watch the hourly 200 SMA. 200 period, simple moving average off the hourly. If the bears can get it and keep it below the hourly 200, nothing's really changed. Meaning bigger picture, nothing's changed. We're still caught in a big box. But shorter term thinking below the 200 SMA here on the hourly, you maybe got room for a flush back down towards the bottom end of that range. Bulls keep it above the hourly 200. Again, nothing's changed. We're caught in a chop. But they maybe got a better chance of trying to work it back up towards the highs. So hourly 200 QQQ, hourly 200 on the S&Ps, which we are a little bit below into the open. But yeah, a couple of levels there, and then a couple charts for you. Now, for conversation's sake, let's just say the market gaps up this morning. We're breaking out tomorrow, back to all-time highs. Everything is peachy. What are a few things I might want to buy? And to be frank, given all the squeezes, you maybe look to buy the S&Ps and the QQQ, keeping things nice and simple. But if I get a better market, I get a 15-minute, 30-minute buy trigger on the indexes, what name might I want to go buy? Well, it's not going to be a Microsoft, -60. I'm not going to be too quick to buy a Tesla, -37, a Google, a TSM, Amazon. From the Big 10, the only two I can give you right now would be Apple and the Netflix. So for Apple, pretty good rebound here after a couple of weeks of poor behavior. One thing I would like to find in Apple, which you don't have at the moment, maybe for more of a big swing trade down the road, would be a bigger time frame squeeze. It is a little bit squeezeless as it currently sits. But no weekly squeeze, 11 points out of 15. No 3-day squeeze, but also 11 points out of 15. No 2-day squeeze, 13 points out of 15. So bigger time frame, no squeeze action. But what I would look to do here off of a lower time frame, in a better market, maybe off of a 15-minute, 30-minute, or hourly squeeze, just trying to play for a push into the 250 call wall. Now, granted, that's not going to be a home run trade. You buy it around 245-ish, market catches a pop, Apple into 250. I don't think you go and bet the farm on that idea, but I don't think we're in the market for that kind of trade just yet, where you do really pile in, get crazy heavy, and call for a huge move. Till the S&Ps and QQQ can break out. Tough to get a breakout in individual stock, tough to get continuation, tough to get follow through. But if the QQQ can catch a bid for a few hours even, that might be enough for the best name on the board, catch a little bid, maybe up into that 250 call wall. So key there first would be, can I get a buy trigger on the indexes? But then secondly would be, can I get a buy trigger for the Apple? 1 hour squeeze, don't buy a signal just yet. No 30-minute squeeze. Again, not the kind of thing where I've got a really crystal clear setup into the open. But put the QQQ first. Better action this week in the QQQ. Being that Apple's #1 on the board for the Big Ten, there might be a path there from that 245-ish into that 250-ish call wall. Looking like a little open down around 244. The other name here off the Big Ten would be Netflix. I'll show you the issues and I'll show you what I like about it. The issues are, I can't go jumping in and buying it today with a 15-minute sell signal, a 30-minute sell signal, an hourly chart with a score of -5, and a 2-hour chart with a score of 0. From the ground up, Netflix doesn't offer any buy triggers. If I can get buy triggers, right, hold their ground near $1,000, pop it a bit, clean up the 15-minute. If I could get fresh 15-minute or 30-minute buy signals, then it could make for a good chance to buy it on the first pullback to that daily 21. Netflix has been one of the stronger names as of late. Compare it to an Amazon. Netflix holds up much, much better. Compare it to a Google. And I think with Google below the 21 and the 50, Netflix holds up much better. Compare it to Meta. Meta, not too bad, but you're breaking below that 21. Compare it to Microsoft. I do think it looks a lot better. But again, the key would be, can I get a buy trigger on the indexes first? Index first, then Netflix. And then if I get the index buy trigger, anywhere above that $1,000 level, 15-minute squeeze, 15-minute buy signal, 30-minute buy signal, try to come in and call for a spot to buy it. If we have QQQ flushing towards the bottom end of its range, I don't think you're catching anything good here at Netflix. But I'll keep that on the board. I will keep Apple on the board. And then the big man on campus for this week will be Nvidia with earnings. And of course, could be a big deal for Nvidia, could be a big deal for QQQ, SMH, all the above. The major thing I'll show you here for Nvidia, knowing earnings is always a giant coin flip. It does have a 2-day squeeze, a 3-day squeeze, and a weekly squeeze setting up. So while, yeah, in the short term, it has been a good deal of back and forth here, it's back and forth in the context of your weekly 3-day, 2-day time frame, trying to catch a breather, trying to build up the energy, potentially for your next big move. As the weekly squeeze currently sits, it does lean a bit more bullish. You hold your 50, you're above your 21, you have a 12 out of 15. Target would be around 170 for that weekly squeeze. Now, I don't think they're getting there after earnings, but a little gap up and a little grind higher. I think anything other than a move back under 130, bigger picture, leaves that weekly chart in a good spot to eventually break out, fire long, try seeking out that path towards a $170. Under 130, I think you're caught in chop. Under 110, God help us. So that'll be a big one for Nvidia itself, and then the group itself. And you have the SMH in a very similar boat here. Ginormous weekly squeeze, big 3-day squeeze, a big 2-day squeeze. That can all eventually make for a move into 300 or a move down into 200. Being that Nvidia is the Michael Jordan of the SMH, where that goes later in the week after earnings will probably matter. For now, we'll jump over to Tesla. Now, again, short term, I don't think a very good-looking name. 21 EMA under the 50, -5. So I don't love any of that for a short-term trade. But I'll give you the bigger picture analysis. It maybe shines a little bit light on the recent pullback. If you look at your monthly chart here for Tesla from From May of 2022 up until December, you've got Tesla chopping back and forth in this huge monthly squeeze. Right, now that push off of 21 EMA when the squeeze fires takes Tesla from a casual 225 into about $485. So I'm going to round up a little bit. And let's just say on the initial push out of that giant consolidation, the price of Tesla basically doubles. All right, so one thought there would be, yeah, the freaking thing doubled in a handful of months. Call me crazy. Maybe the poor thing needs some room to take a breather. I know we're all traders. We're all very short-term minded. We would like Tesla to go from 250, 500 directly into $1,000. We want all the action right here, right now. They take you from that 21 out of that big box directly back into the previous highs. Right? And they do that in a very quick and a very impressive fashion. You got to imagine everybody and their mama probably coming in up here buying Tesla, calling for the breakout into 500 and change. One level of resistance, one spot, one breakout level. You got to think how far Tesla came to even get to the breakout point. They almost doubled the thing. So bigger picture, I don't think the fact they failed the first breakout is really all that crazy. Squeeze fired, took you towards your target. It got the job done initially. And now my thinking would be if they can at least hold it above 270, avoid dropping Tesla back into that box. I do think down the road, and again, maybe not anytime soon. You want to wait for a buy trigger. The key is always wait for a buy trigger. But I think down the road, you get a buy trigger above 270-ish. There might be a path down the road for continuation off that monthly squeeze. It could be a case where Tesla builds energy for 2.5 years, breaks out and fails, and they work it back down, back into the box, and you're right back where you came from. I would argue a little bit more likely above 270. You're looking back at the chart at the end of the year, and you did get continuation off that original monthly squeeze. Push it towards the highs, rejection, pull it back a bit, hold your ground, rebuild, turn the corner, and then get the actual breakout. When I look at my daily time frame, not too inclined to be in a big rush to open the trade just yet. So more of an idea. And then we looked at Nvidia, looked at Apple, looked at Netflix, looked at the SMH. And the final thing here, more of a market context thing. I would watch the financials. Watch the S&Ps, watch a QQQ, but also keep an eye here on the financials. One of the bigger, more important parts of the market. If they can rebound and get a couple closes back above their daily 21, then try to break it out off the back of that daily squeeze. Good thing for financials, also a good thing for the entire market. But my major thinking into at least, between now and Thursday, being very patient on brand new swing trade ideas. You go in here today, tomorrow, Wednesday, open a bunch of shorts. Nvidia comes out with earnings, they're gapping the thing up 10, 15%. You might not want to be short into that Thursday morning. They get Nvidia going, they might get the whole market going. You go out there and buy every call in existence today. Nvidia gaps down 10, 15%. Well, into Thursday morning, you might not want to be long anything. So bigger picture, again, all from my point of view, your mileage might vary, but bigger picture, nothing's changed. Very choppy, very range-bound market with bigger time frame squeezes that still lean a little bit more bullish. It's just our shorter-term time frames, 15-minute, 30-minute, hourly. They got a little bit tossed around on that flush from Friday. So a spot for patience. They got a big catalyst coming up at Nvidia. And yeah, get through today, get through tomorrow and Wednesday. And from a swing trading point of view, maybe the end of the week offers a little bit more clarity. But again, I would put the indexes first. We can go find a bunch of good-looking longs. We can go find a bunch of good-looking shorts. if we open those trades and the market goes the opposite direction, may not be getting paid. But all right, y'all. Any questions for me? Any chart requests? Drop them here in the chat. I've got you covered. And then for the folks in my room, I will see you over there in about 10 or so minutes. And then my brand new Falcon computer should be getting here in a handful of days. So I'm hoping by next Monday's pre-market stream, we're back on Thinkorswim. Although I do got to give them credit. I like TradingView. They got pretty good looking charts, nice functionality. But I do miss my Thinkorswim. And yeah, hustle bustle. That's kind of been the theme as of late, which is, for one, really impressive as far as Apple goes. They're dumping Amazon. And not in like a crazy panic fashion, but more so in a very steady, methodical fashion. Selling Amazon, grinding that bad boy lower. They're doing that with Tesla. They're doing that with Microsoft. They're doing that in Google. They're doing that in the IWM. They're doing that in the Dow Jones. Apple, on the other hand, last 5 or 10 days is more of the inverse chart. Distribution in the bulk of your big tech names, accumulation in the Big Apple. In one way to look at that is, well, imagine if Apple wasn't getting picked up, and they were selling Apple as hard as they're selling, Google, Microsoft, etc. We would probably have an uglier QQQ. And not probably, we would have an uglier QQQ. Right now, Apple doing a lot of that heavy lifting. If an Apple can get a QQQ behind it, good for all involved. But yeah, definitely some impressive action in the Big Apple here. Hey, good morning, JK. Would I also have the indicators on Tasty? Unfortunately, for the time being, no. Just on Thinkorswim and TradingView. I know we got a few of our indicators on Tasty. I'm pretty sure the on there, maybe the Ready Aim Fire. But no, for now, it's just TradingView and the toss. Good to see you, JK. Oh, David, so here's what happened. The computer in the office I'm using is about, I'm 32 years old right now. About 10 or 11 years old. And yeah, just too outdated for the most recent update of TOS. I think it was a couple of weekends ago, TOS had the update. And then I went to log in, couldn't get logged in. Talked to customer service, and they told me it was time to hang it up. Got to take the old computer out behind the barn, and then went and ordered up a new Falcon trading system. And I think the last email I got was they're doing their testing on that. So yeah, I'm hoping by next Monday's pre-market session, brand new computer, a couple of brand new monitors. I'll get my my international space station of a trading setup going, and then back to old faithful TOS. Good morning, John. How are you? SMCI. Yes, I think anything semiconductor related could be impacted for better or worse by Nvidia later in the week. And as far as SMCI goes, wow, that's pretty impressive, huh? It's just a quick double in a couple of weeks off the bottom. Let me look at a few different things here. I think the key for a name like an SMCI, in terms of calling for direction, you'd want to make it very much a lower time frame thing. Reason being, you look at the weekly chart, you look at the bigger time frames. Amongst other things, you're lacking any kind of short-term trend. No real wind at your back, not quite an object in motion trying to stay in motion. Let me see. Yeah, because I don't have any buy signals across these bigger time frames, What I would do is mark up a couple of key levels. Right? That could be your daily 200, daily 21 EMA. We'll mark them both up. So here's your 200. There is your 21. And then my clarity and trigger would come from lower time frames, because I'm not going to get them for now from a bigger time frame. So if I drop down to an hourly, like I'd watch something exactly like that. Brand new 1 hour squeeze right above a key level, that daily 200 SMA. So now I'll sit here, I'll watch that and wait for a buy trigger off of the hourly. But I can't wait for a buy trigger off the weekly, because at the moment, not a weekly chart that could give me a buy trigger. Not a 3-day time frame, not a 2-day, not a daily, but I could get them down here above that daily 200. 30-minute a little bit neutral, 15-minute a little bit neutral. Yeah, I would anchor to the SMCI there. The hourly rather, on SMCI. Java, is BABA done going up? Yeah, BABA's been on a bit of a tear as of late. Like we talked about earlier, there's the easy part of a given move. And when you're looking at your daily time frame, what I found and what I come up being taught was the easy part of that push will be from your 21 EMA, and then about 2.5 to 3 average true range moves above that 21. That's my green line. Green line measures at plus 3 ATR. BABA last week closes, never mind 3 ATR above that 21. That might be a good 5 or 6 average true range moves above that buy zone. Does not mean it can't keep on going higher. Does not mean it has to pull back. It just means in the background, you've got a pretty strong growing probability that eventually they got to work back to that home base. Right, now the gap down from the high on Friday to the open around 136 this morning doesn't even take you back to the third ATR. Meaning, yeah, BABA could potentially pull back a really good deal here. But at the same time, just because they're overbought doesn't mean that party has to stop. Right, so now we're trying to figure out, is a pullback back into 115-ish or more continuation back into higher prices? So 15-minute, 30-minute hourly time frames will probably paint most of that story. 15-minute, 30-minute hourly above their 21 EMA, good structure, buy signals. You maybe keep on jumping in, finding squeezes, calling for higher prices. 15-minute, 30-minute hourly, they get a little bit sloppier, a little bit softer. Then again, it's a name a couple of country miles above that buy zone. The gap down this morning, nothing in comparison to what it could pull back into. So yeah, watch that 15-minute, 30-minute hourly. They remain really bullish, keep on calling for higher prices. They get a little bit more neutral. Then yeah, short-term BABA might have hit a point of exhaustion. Down about 5% this morning, with Hong Kong shares down 2%. Little action over there for you. All right, guys, a couple more here. BAC and Nana's got CBOE. Good morning, Nana. I love everything about that daily chart. Squeeze, buy signal, perfect score, A+. Right on top of that buy zone. 2-day chart, solid. 3-day chart, pretty solid. Yeah, I think for a short-term trade, I'm liking that daily squeeze. 4-hour chart, also squeezing. Hourly chart, A+ squeeze. Yeah, I've got to like that. So above that daily 21, you want 15-minute buy signals, 30-minute hourly buy signals. If they can keep that, then the odds favor they take that daily squeeze, try to fire it long. and you're grooving into 220-ish. Big part of that will most likely be the indexes. QQQ breaking apart, S&P's breaking apart. Tougher for CBOE to go on and break out. QQQ strong, S&P strong. I like the setup. Already poised for a push. Get that a little wind at its back. Might be in good shape there. And I love the fact you can take a shot here and putting aside a giant gap down. It shouldn't be too painful trying to figure out if you're on the money here. You buy it above that 21. You can dump it below the 21. Yeah, really clean. Good call out. And then, yeah, Chris, so as far as BAC goes, big part of that will be the indexes. Big part of that will be the financials. Although what I would argue right now, the basket itself, XLF, maybe looks a little bit better than JP Morgan. Into the open, XLF gets a daily score of 6. While the financials get or BAC rather. Yeah, XLF has a 6, BAC has a 0. The group is a little bit stronger, though granted they will move together. I think in the short term, the key for BAC, all the above, Goldman, Morgan Stanley, Wells Fargo, etc. 1, do we have a good market? 2, can XLF get back above that daily 21? Couple closes back above the 21. They go and get a couple lower time frame buy signals. They do that in a daily squeeze. Right? It's your push off the bottom, the break in the action, the catching of the breath that can print that squeeze that eventually takes you into another leg higher. Below that 21, maybe room for a flush down to the 50. At that point, BAC goes down a bit more, JP Morgan goes down a bit more. I don't think would kill it, but maybe a bit more choppy. So I keep an eye on that one there. But all right, y'all, I shall let you go here. As always, I appreciate your time and effort. I am back with you Wednesday morning, same time, same channel. And yeah, I guess my overall message this morning would be choppy market, range-bound market, very short-term neutral market, but with big time frame squeezes still trying to work in the background. To wake up today and with maximum conviction call for timing, call for direction, I think that's a little tricky. But knowing that whether it be a week down the road, a couple of months down the road, that there could be big moves around the corner from all the squeezes, I do think that holds true. So my goal would be for myself and all of us is that we're not getting too chopped up right now. In the chop, getting long, getting short, getting long, getting short. Getting so chopped up to the point where finally they break it out, or they break it down, and we're not in the perfect position to fully take advantage of that. Any profitable trade I can find in this kind of market right now, in terms of the size of the risk, in terms of the size of the P&L, conviction, all the above, that pales in comparison to when the squeeze actually begins to fire. Or at the very least, until your bigger time frames have the proper signals to go on and fire. So be patient, keep on keeping on. I appreciate you all as always. And yeah, same